All right, it says we're live. Yay, it's Wednesday. My Facebook group. I'm so excited to have Doug here today. He's just a really good friend of mine. He's our tax CPA. He's just a wealth of knowledge, and I'm so thankful that you're here, Doug, because I think this is like just a great conversation to have with business owners. So Doug is pressed for time. He's busy, so we're not going to keep him too long, but we want to make sure we answer your questions. If you have any questions, drop them in, or if you're watching the replay, we'll get those answered. So just let us know, and we'll let you introduce yourself, Doug.
Hey everyone, I'm Doug McIntosh, friend of Jordan's, and we've been working together for, I guess, what, 4 or 5 years at this point. Yeah. She, takes care of a lot of the needs that we don't necessarily get into as CPAs. So it's a good relationship to have somebody like her that does good, clean bookkeeping and can give us good information to help with the tax side of stuff.
Thanks, Doug. But yeah, and I have to give Doug credit because like almost 7 years ago, when my first daughter was born, we were sitting on the dock in Rockville. Doug was the one that was like, why don't you start your own bookkeeping business? And it just went from there. So Doug, I always am just really grateful for that, because I don't know if I would have had that idea, but I'll keep an eye, and if anybody pops in with comments, I'll let you know. But basically, we kind of talked about this. I feel like I'm in like a interesting position, as I used to work in, public accounting on the tax side. It's been years ago, but, I remember how busy it was, and just the busy season was like all hands on deck, and it might be different now, but we had like boxes full of folders and, tax, documents everywhere. And it was just like we were holding on, just trying to get through it. And so I see that side of it and how hard the CPAs work, and, how busy they are. And then also working with business owners and them, having kind of that feeling of, I only, talk to my CPA once a year, or, I didn't know that this was going to be my liability. And so I think there's just like a great conversation to have about how we can build this better relationship, and how we can really use our CPA and get all of their knowledge, because y'all have so much knowledge that can help with planning and making sure that there aren't huge surprises and all that stuff. So we'd love to kind of get your feedback and, from where you sit, kind of advice for how we can be better prepared and work with our CPA better.
Okay, they're all good points. So typically, we're limited to what the client provides us, right? So in order to do our job well, we need good numbers and all the information necessary to do a good tax projection, put together an accurate tax return. And I would say it kind of starts basic with, there's 2 different levels of clients. There's some that we provide a service of preparing tax returns for, and they're the typical client of, maybe it's a family with, a W-2 income, couple of kids, that type of stuff. There isn't a whole lot of value that can be added as a CPA to that. So yes, we can make them think about some different things as far as retirement or health plans and stuff like that that could benefit them. But as far as really getting into the tax code and needing more knowledge of a CPA, that relies more on the self-employed and the business owners. And that's really, our bread and butter, what we want to do, because it provides more opportunity and people can see the tax savings that we, provide them from one year to the next. And our goal always is to try and show people, hey, look, we can do A, B, and C, and it's going to save you X amount in taxes. So therefore, this fee that you're paying us, we've covered it in tax savings.
Yeah.
We don't want to end up charging people a lot of money for our time that there isn't value added to what we're doing. So that's the whole goal that, between the client and the tax professional. I would say, in order to, we always need to be in communication with clients, and go into what Jordan was saying, tax season between really the end of January through April 15th, depending on what else is going on, whether COVID or hurricane extensions or everything else that we've dealt with the past decade, it seems like we're so covered up with more work than we can handle that we can't call every client. So it's not that we don't want to, it's just that we're just trying to catch up to where we need to be. Therefore, I'll always tell clients that if something comes up, call me. I can call people back. And if I get a voicemail or email or something to know what's going on, then, we can have a conversation and figure it out. And it's always better to know things before the year is over, because really after December 31st has ended, there's not a whole lot that can be done. So with business owners specifically, that, tax planning is one of the biggest values that can be done with your tax return. And that's what we as CPAs want to do for people.
Awesome. So that would be, people contacting you for obviously any life-changing events like, marriage, baby, and then also just with like their revenue. Like I'm seeing, a lot of clients, like they had that dip in 2020 and it's just continually going up, which is great. But it's like, okay, let's do a mid-year check-in with your CPA and show them, kind of compared to last year. I mean, is that kind of something, you like to do, or have people send you the numbers? Anything else that they need to kind of send you mid-year or keep in touch about?
Yeah, I mean, it can be even business changes. Hey, we're so busy, we're looking to, hire some extra help. What does this mean? What do we need to do to prepare for that? Are they an employee? Do they need to be a contract labor 1099? And what are the rules? Maybe I want to get into some other type of investment, whether real estate or something like that. And the questions around that and how it fits into their tax picture. And that's where it gets so complicated and complex with the tax side of things, is that a business for one tax situation or family tax situation could have completely different tax consequences for the next family.
Yeah.
We really have to, see the whole picture to give reliable advice.
Right.
The name of the game is always, if we can set expectations between the client and what the tax results are and come up with a strategy, then there's no surprises and everyone walks away happy. Some other tax. We're still talking about taxes.
I mean, it's happy.
Yeah. If
I
you
think
know
that's a
that,
great
hey,
point.
we can put, which I'm sure you do a lot of this, Jordan, of, all right, right off the top, we're collecting revenue as a self-employed person or as a business, and we need to have a savings account set aside. And right off the top, we need to take this percentage and put it into this savings account to be prepared for our quarterly estimated tax payments and our end of the year balance.
Yeah. That's what I love, getting a spreadsheet. We map it out month to month, especially when they have those dips. And, a lot of them are like, seasonal, just being here in Charleston. So they've got those, more cash flux or flush, whatever the word is, higher cash months. And so they can sock away more, for those months that are lower. And so, I think that's just a great to like lay it all out there for the estimated, and then that, kind of percentage for income taxes, and just, have that tax account. You don't touch it, and really like talking with the CPA to get the percentage and having those estimated vouchers to know what they are. I think it's just so important, and people just forget that.
Yeah. And I mean, there's a lot of things that even go into that to know what the minimum payments are. You don't have to pay tax as it's earned, as the income's earned. You have minimum payment requirements based on prior year taxes. And so there's a lot of that, and it can be a moving target, but we can set those expectations and have you pay minimum taxes to avoid late penalty and let you hold on to your cash as long as possible. But having the peace of mind, knowing that the cash is there, makes the whole process that much less painful.
Yeah. And I just love like the peace of mind too, when you were talking about the services that y'all offer, and it's also just like peace of mind. Like that's like a huge part for people. And it's like when we talk about the estimated payments and the income tax, like, maybe it is 22% or whatever, and that might change, but at least you've got that covered. You're paying what you needed to cover for last year, and this year it'll be more, but at least you'll have the base. Camp doesn't start until 1 o'clock, so I've got my buddy. You see Doug? But yeah, Gret gave us a heart and thumbs up. Thanks, Gret. If you have any questions, let us know. What else did I want to talk about? Anything else around kind of the estimated and the tax payment kind of savings and planning stuff? I know it's like this moving target, but I think it's just great to have. It's kind of like owner pay with me. It's like, instead of like going through the month and then whatever's left over, you pay yourself, you save for taxes. It's just flipping it around, doing this first and knowing that these percentages, owner pay percent, tax percent, plus your operating expense, those equal 100, and how do you kind of move those puzzle pieces around. But I think it's just having that conversation with your CPA is just so valuable. Even if you have the estimated tax vouchers, just knowing that kind of percent for estimated tax or for the income tax, just knowing that percentage minimum to kind of tuck away is just,
Yeah, and that's part of the tax return process. That's an important piece that every CPA that's doing those types of returns should provide. And I would say, if they're not even touching on those subjects, then that's kind of the difference between a CPA that's being thorough and taking care of you versus one that is providing a tax return service and nothing above that.
Yeah, I've definitely seen that where I'm like, okay, where are your estimated vouchers, or what does that look like? And they're like, I don't know. And I don't know if
and there's
it's buried, in the paperwork that they got and they haven't looked through it.
And that's what we try and at least so I work with a firm, it's called Legree Bailey Henske, and we specialize in tax services. We're a staff of pretty much all CPAs. We have 1 or 2 in-house bookkeepers that do some things, but we don't do a lot of that. We would much rather have people like Jordan doing that stuff to provide us the numbers, and it's better value that way. So we want to spend our time, looking at the code and coming up with like strategies that are going to save you money. Back to that whole conversation. But we are, all working on our own clients and putting together these returns for people. And we do it all the way. The communication, the end, there's always, a phone call or email that covers everything that's going to come to you. And then I have an admin girl that processes it and she sends it all to the people. If any questions come up, that, they have someone to reach out to. And that's, I think, very important to have that one-on-one personal relationship with the CPA, because it's a personal thing.
Yeah.
You have to be involved with all aspects of your family situation to get things done right.
You really get to know someone, and it's
So communication is key. Yeah.
And Gret asked,
go ahead.
What were you going to say?
I was going to say, the other thing is like setting goals and knowing that stuff. I know you do a lot of that, but, on the front end with the projections on the taxes, if we have a conversation that, okay, we know that you're looking to grow the business and have those expectations, then we can estimate the taxes properly.
Yeah. And this goes to Gret's question, which is, what are estimated vouchers? Do you want to give us a quick?
Anyone who has a tax liability in a prior year is required to pay minimum quarterly payments, for the 4 quarters of the year of the next year, if they expect to have the same or higher income in the subsequent year. So, there's different rules to it based on income, but safe harbor is the general rule the IRS has. And they say, if your income increases, no matter how much it increases, if you pay 110% of the prior year balance divided by 4 in the 4 quarters, then you are exempt from any late penalties. And it's just a way to avoid late penalties. And the whole goal is we don't want to pay the IRS any more money than we have to.
Yeah. And this is people, their LLCs, not the SCorps, who are paying themselves that
Well, even
regular salary,
they
even the
all-
S-Corps pay it.
yeah, all
Because,
pretty much
you know, if you think
every
about like,
business these days is what we call a flow-through entity.
mm,
And what that means is that the taxes are paid by the owners on their personal tax return.
okay.
So an S corp is a little bit different in the fact that the owner has to pay themselves payroll. So they're going to typically have some tax withholdings on their wages, but to use that business model efficiently, they hopefully have some pass-through income as well, which is taxed at a lower rate and exempt from FICA taxes. And therefore, you know, that's what they're paying the estimated quarterly taxes on.
So if you're an S-Corp out
That their
there, make
withholding
sure
rate on
you're
their
talking
wages
to your
is correct.
CPA, because it's not just checking a box and moving on.
Yeah, and that's you know, we see a lot of S corps. It doesn't make sense for everybody, that it requires a little bit more on the tax preparation and payroll and all that. So it gets a little bit more complicated, but there are tax savings with it, and it's a great thing.
Yeah, and I like to think of estimated taxes as like, you know, if you're a business owner and you're just taking a draw, like you're not paying yourself a salary that has, you know, if you worked for a company, they would pay you and you'd have taxes taken out with every pay stub. And so if you're an owner and you're taking owner draws, you know, the government basically doesn't want you taking money and paying yourself every month and like them not getting paid till the end of the year. So I just kind of think of it as like, from their side is like, well, you know, you need to be paying us money through the year instead of waiting to the end of the year. So
Yeah,
that's kind of what I also just like think about, like they want their money.
and that's true. And touching on that, I would say one of the most common misconceptions and questions that I hear people ask is, we didn't take any money out of our business all year, therefore we don't have to pay tax on it, correct? And that's it doesn't matter. The IRS uses cash basis of accounting for that stuff, or whatever you elect, accrual. But when it is earned, it is taxed regardless of whether you paid yourself or not.
That is such a great point. I hear that a lot too. They're like, oh, well, I just didn't pay myself. And it's like, the IRS doesn't care if you keep it in your business bank account or you keep it in your personal bank account. Like they want their cut of it. So,
and the good news in those situations is typically the cash is still there. So they've been frugal and they can pay the taxes, but they just have to pay it sooner than they expected.
Yeah, it's just like they thought, oh, I wasn't going to pay myself and I'm doing this great thing. But then it's like, well, yeah, you're still. And that's the thing I hear with businesses, like kind of scared to grow, scared to get more revenue because they are scared of those extra taxes. And it's like, well, you are making more money. So now you just need to make sure you're saving more of that money. You know, I've got a dog and a 6-year-old in here. So, you know,
things entertaining.
Yeah, it's always something. But yeah, so just, you know, knowing that even if you do make more money, yes, the government might take some, but you know, you're still making more. So just save more of that. Kind of my thought around that.
Yeah.
Thanks, Sarah. Sarah's here. She says, good points. Sarah, you have any questions? There was something else. I wanted to ask you about the, you know, with my perspective of working with clients one-to-one is, you know, when we are looking at hiring, getting either subcontractors or employees, we look at, you know, how it's going to affect cash, you know, kind of what percentage of revenue that's going to be, how it's going to affect profit and, you know, all those things. But from your end, you know, kind of, you touched on it earlier, but what's something that you kind of look at with business owners when they're thinking of hiring, you know, from your perspective?
I mean, the biggest question these days is typically, is it an employee or a contract labor? Because of the rules that surround that and risk, that there's a lot of risk of bringing people on as a contract labor that are truly an employee, and a business can be sued for that. And then they're liable for all the FICA taxes they didn't pay. So making sure that things on the front end are done correctly by the tax code to protect them from any of that risk is our perspective. And what that all comes down to is the relationship of, are you telling the person when to be at work and when to do work? That type of stuff. How much control do you have over the relationship? Can the person do work for other people while they're, still have a relationship with you and doing this business? So there's, rules that go into it to assess that.
Mhm. And I always like to tell people, like, if you want a subcontractor, like, build the job to be a subcontractor. Like, instead of like, how can we consider this person a subcontractor? It's like, well, make it so that they use their own tools, that they do have a flexible schedule, that they do this, this, and this. And so that way it's like, if that's what you want, then build it. And if not,
Yep.
then it's going to be an employee and just deal with it.
Yeah. And sometimes, say you're an S-Corp and you're already running payroll.
Yeah.
Pay them as an employee.
Yeah.
Just mitigate any risk you have.
And another question that comes up, what's your thought around this? Some people, they are trying things out with a new team member, and it is subcontractor and it does meet those requirements. And then they do want to move them as an employee. Within that 1 year, that person, if they get a 1099 and a W-2, does that set off flags? Does that look weird? Do they need to wait until the next year to, create an employee position for them? Or what are your thoughts around that?
I think, I don't think that's necessarily in itself going to raise red flags. And you would just want a paper trail to show, what was done and why. So, hey, at such and such date, we changed our relationship and this is now an employee.
Okay.
Some kind of paper trail and anything like that to substantiate is usually the goal. And what, as applying the tax regulations and knowledge, what we're usually doing is, can we reasonably defend this stance? And if we can come up with a plan of why this was done and that it makes reasonable sense, then it's okay. It passes the test. If it doesn't, then typically I'm going to advise against it. And, I think we kind of talked about some of that, the peace of mind that it should provide. I find myself a lot of times talking to people, and the question that lies at the end is, do you want to be thinking about this at night when you're going to sleep?
Exactly.
Is this worth losing some sleep or thoughts over? And typically the answer is, well, no. I mean, this is a small thing that I have lots of other things to worry about, and it's not worth it.
Yeah, this group is called the Peaceful and Profitable Entrepreneur, because being peaceful around your numbers is such a huge thing that we just kind of take for granted if we're not. And so, yeah, that just can really affect you in every part of your life. If you're just like in the back of your mind, constantly like thinking someone's going to come out and find you, or, something, the IRS is going to show up at your door.
Well, and that's probably a good thing to bring up, because I know Gret's listening, and I've had this conversation with her where she has said, you're like the IRS. And I'm, as a CPA and a tax professional in the public profession, we're providing services and representing the public and our clients. So we actually represent the public against the IRS. Now, we're trying to help them comply with all the laws so there's no risk and no issues. But at the same time, our interest is in making sure that the client pays the least tax possible in a legal fashion. And we defend our stance, right? But the work that's provided by the client is the client's representation of their stuff. We're not auditing. We're not attesting to any of the numbers that they provide us. So, a client could come to me and say, I have a business mileage log and I drove 20,000 miles last year of business miles. Well, unless I think the number doesn't fit with the type of business they're doing and it's not a reasonable amount, it's not my position or job to prove that they actually drove those miles. And that's not what they're paying me for.
Yeah.
So I have no interest in doing that. My only interest in those situations is to make sure that the client understands the risk of something that they're doing, and that, if it doesn't fit with the business model that they have, that they know that they're creating exposure of IRS audit and things by what they're doing.
Right. Yeah.
So
Like
it's
they
all
have to-
advice, and it's really up to the client. Like everything with that is up to the client. You know, someone could come in and probably give me a sheet of paper with completely made up numbers. And, you know, unless something looks fishy and doesn't make sense, you know, that's not my position to get in there and ask them why, or, you know, is this real?
Yeah.
You know,
Brett says, when Doug explains it, it always sounds easy. Thanks, Brett. Yeah.
And I would say that's the other thing, is that I'm always telling clients that give me your stuff as organized as possible. If you're self-employed, if you can give me a report from QuickBooks or a piece of paper with the income and expenses listed out, I don't want to go through, you know, bank statements or receipts to do that stuff. And it's not good value for my services.
Yeah. We had a client who, you know, we did some QuickBooks work for them and realized that he didn't understand how to match deposits to invoices. So, you know, the invoice was there as outstanding, and then the deposit was there, also counted as income because it wasn't matched. So he had over-reported income, like, or revenue by, like, I don't know, $20,000 or something. And so, you know, he could have handed that to a CPA, and this would have just been like, okay, here's revenue, but the CPA is not going to go in and see the, like, what, you know, like, what's going on here. I mean, maybe they would catch it if there was, like, you know, they saw the big AR balance, or, you know,
Yeah,
like,
if you saw the
on
balance
there.
sheet, hopefully you would say,
Yeah,
it doesn't look right here.
but, you know, if this has been going on for a while or whatever, like, you know, that's just something that,
Yeah,
you know, the CPA can't
people
catch.
getting into QuickBooks without the training, you know, it sets them up to process everything through receivables and payables. And if you don't clear the transaction, you can have a lot of duplicate reporting and mistakes.
I mean, we could sit here and talk about
Yeah.
benefits of bookkeeping all day long, but
But
Sarah
that
says,
it
"Haha, I love it."
actually, I think, you know, going on to the relationship between a bookkeeper and a CPA, truly the value you get for using a bookkeeper, it cuts down on the cost of getting your tax return prepared, because one, you've paid that cost throughout the year. You have reliable books, so you can set expectations, plan with your business, you know, make decisions as you need to. But the fact that, you know, I'm not spending 5 hours asking questions that I don't need to get the tax return done correct, and the client's not wasting their time digging for all this stuff to figure it out, you know, it just opens up a lot more possibilities. And I don't want to send people big bills for things like that. You know, I've got enough work that, you know, I don't need to fill in my days asking all the questions and doing that. I want to spend it saying, hey, have you thought about, you know, retirement or HSA or costs and all that type of stuff.
And that's great when it comes to the end of the year with retirement, like the STEP or whatever, you know, we need those reliable numbers to know what, you know, you can contribute, and it's just kind of already there. It's done. Let's do this, you know, have that number ready. So that's why I love talking to, like, you know, the CPA and the CFP, and having everybody kind of this whole holistic, you know, it's like when you go to the doctor and, like, all the doctors aren't talking to each other. Like, all these specialists are doing one thing and this one's doing something else. And kind of the same thing with the people that help you run your business, and making sure everyone's kind of in communication and, you know, talking and knows what the numbers are and what kind of the best steps are.
Because if I can communicate it to the, you know, financial advisor, then they can make it happen where it can get transition.
Let me see if we've got no more questions so far, but I love the comments. Sarah and Greta cheering us on. Thanks, girls. Thanks, ladies. Anything else you want to talk about? I don't want to keep you. I know you're doing me a huge favor. I think this is just such a great way for people to remember that, you know, having that conversation and building that relationship is just so important. You know,
I mean, you know, as far as, you know, taxes, little piece of information, you know, consider, like, right now with the stock markets and everything else down as low as they are, you know, it opens up opportunities for Roth conversions and things like that, that I think people should consider this year. Because say your 401k or your IRA has dropped in value. Well, if you could take that drop in value, convert it to an after-tax account at a lower amount, and then it recovers, then you've got a great tax scenario.
Yeah.
So there's definitely opportunities with downturns of markets and things like that can be taken advantage of, or even like loss harvesting. That's going to be a big thing this year, I would think, depending on where stuff goes. And, outside of that, just communicate with Jordan, your CPA, whoever it is. You can always reach out to Gree Bailey Hensky. I'm actually making a transition into private industry, corporate accounting in about a week. So
No,
I'm not taking
I'm
on
sad
any
you're not gonna be
clients.
my CPA.
Yeah, it's an
Oh,
exciting opportunity
yeah, that's good.
to do and expand my expertise as a CPA.
Yeah. Will you have
And I'll miss working with
kind
the
of tax
public.
season
And
at all?
what's up?
Will you have any kind of tax season at all when you move over there?
There will still be a busy season. Yeah, I mean, I think they'll have a different fiscal year end, but to close everything and prepare tax returns,
You'll still be doing.
it just won't be all condensed into January, February, March, April.
Yeah.
Good, and maybe I can actually get to ski some in the winters.
I know. Wow, that would be
Yeah.
amazing.
Yeah.
I know. Hopefully, I'm excited for you for this move, though. I think it'll be good. And you've been just a great resource for us, and I know you'll just continue to do great things and help a lot of people with your tax brain and how easily, like Brett said, you just explain things so well, and that's just so helpful to have from CPA person.
Well, thank you.
Well, thanks. I don't think there's any more comments or anything, but thank y'all for being here. And if you have any questions, if you're watching the replay, drop them in. I'll look at them and comment. And yeah, we just appreciate y'all watching and showing up, and see you next week.
Thank you.
Thanks, Doug. I'll see you later.
Okay, bye.